Hi friends, welcome to Money and Politics. Friends, today we are going to discuss in detail about the coming economic collapse. We'll be discussing whether the coming economic collapse is inflationary or deflationary, and we'll also be discussing about the price movement of gold going forward. So before we start, just remember two very basic things. Number one, gold has never been an investment or a wealth creator, and it should never be perceived as one. It is a hedge. Number two, it's a hedge against inflation, not deflation. So just remember these two very basic things and let's dive into the details. So, friends, I will start with the recent rally in gold, why it happened. The rally that we witnessed in the past couple of weeks was because of the Fed's unlimited money printing, $2.3 trillion of stimulus, that is more than the entire size of the Indian economy, which has 1.3 billion people. So Fed just printed that money out of thin air. Plus $5 trillion of repo credit line for the banks. So there's a speculation that this will give rise to inflation or hyperinflation down the road. Now, that's all it is, as I said, a speculation. So it's a speculatory rally without any foundation, without any basis. Now, can this rally continue? Of course, absolutely. It can continue. It will continue maybe till the previous highs. It can test the previous highs of 1934, $1934, or it can even cross that and go to maybe $2,000 for a very short period. Now, let me tell you, this rally will only last until this global lockdown is in place in all the major economies in the major countries. It can be 1 month, it can be say 1.5 months, whatever. So once the economy opens, now I'm not saying the economy is going to open completely across the globe. That is not going to happen for a very long time, much longer than what the people think, because this virus is going to come back again and again with different mutations and different strains, and there will be multiple waves like what's happening in Singapore and what's happening in South Korea. So I'm not expecting complete economic lockdown to be open, but even if partial lockdown is open and the economy at least starts moving in some of the sectors across the major countries, at that point of time, people will realize, when the gold starts crashing and it's in front of everyone to see, that we will face a deflationary collapse. At that point of time, the retail investors, the dump money, which is investing in gold, again, like listening to the people who are saying hyperinflation will come down the road. So listening to them, the dump money always invest in at a wrong time. So when this economy lockdown opens up and the gold price starts crashing, at that point of time it will be too late, and the people will get stuck at high levels. Now, I will repeat again. What happened in 2008? In 2008, we were supposed to have a deflationary collapse, and it was it was very required for the economy to detox itself at that point of time. But what happened? The world central banks somehow held up the system from collapsing, from facing that deflationary collapse, right? And what did they do? They just completely destroyed the free market. They just bought everything in 2008. And the same thing is happening now, but at a much bigger scale. The US Fed is buying the junk bonds. They are buying somewhat good government corporate bonds. They are buying the government bonds. They are buying mortgage-backed securities. They are buying everything that's coming their way, right? So what's beautiful about capitalism is that capitalism, free market was the basis of capitalism, right? And in a free market, for every asset, there was a bull, there was a bear, right? There were bulls, there were bears, and there was a constant tug of war between the two. And why there was a tug of war between the two? Because the basic function of a free market is discovering the fair price of every asset, everything, right? So that is called fair price discovery mechanism, right? So that's what the central banks destroyed when they bought everything and artificially kept the system up, kept the stock markets from falling, right? So at that point of time, the central banks kept the system from collapsing and detoxicating itself. So at that point of time, it was clear to me, it was written on the wall, that what US is going to face, what US is going to experience will be exactly similar to what Japan experienced in 1989. I covered that in one of my previous videos as well. In 1989, Japan didn't let any of their major company to fail, and they printed truckloads of money. And they've been printing that money for the last 3 decades, since 1989. And what happened? Japan has never ever come out of deflation. According to the logic that the hyperinflation preachers preach, the amount of money Japan printed, it should be in hyperinflation by now, but it has never come out of deflation. And these 3 decades are often called as 3 lost decades of Japan, right? You might have heard about that. So exactly the same thing is going to happen in US. If someone thinks that US is going to face an Argentinian type or a Zimbabwean type or a Weimar Republic type of hyperinflationary collapse, either they don't know what they are saying, or they know what they are saying but they are deceiving you on purpose. So don't listen to them. At least I want my subscribers to not listen to these people, right? Now just think, in 2008, Fed printed so much money and they started QE1, they started QE2, they started Operation Twist and blah blah, different fancy terms they came up with. At the same time, the European Central Bank, the ECB, was on steroids. At the same time, the Bank of Japan and the Bank of England, they were not behind. They were keep printing the money. So the amount of money that has been printed in this last decade, from 2008 up until now, where has that money gone? Just give me a break. All the people who are saying hyperinflation will come down the line. In these 10 years, with amount of money that US has printed, the US Central Bank had one aim, one goal, to reach a mild, a moderate, a healthy inflation target of 2%. And they were not able to achieve that. So even Ben Bernanke, I remember him, he was attending a hearing in Senate in 2009. And he said, I am worrying about the deflationary pressures, not the inflationary pressures. Deflationary pressures are way more than the inflationary pressures. And let me tell you, a crash or a recession or a depression or a normal correction is always deflationary. What happens after that is an inflation, but before inflation, deflation always comes. So Bank of Japan and the European Central Bank, what did they do? They printed money over the last decade. They could not get any inflation. Why they didn't get an inflation? Because the people were not spending, and you cannot force people to spend. So what did they do? They made the interest rates negative, which means they are forcing the people to spend, and they are saying we will charge a penalty from you if you don't spend. It's crazy, because it's the savers that are putting their savings in the bank account, because of which all the banks are in business, right? If the savers don't put the money in the banks don't have any money to lend further and make any profits. And you're penalizing the savers. It's crazy world we are living in. Now, again, I'll repeat, after the economy opens up and people, it's time for people to go to work, millions and millions of people across the world will find out that their employers don't need them anymore. We will see unemployment through the roof, much more than the 1929 Great Depression. I'm really serious about it. In emerging countries, it can cross around maybe 50% of unemployment. In US, we can see around 30% of unemployment. Even IMF or World Bank recently came up with the 30% figure. I'm thinking it will be way more than that in the US. So at that point of time, it will be too late for the people to come out of gold. So if you're investing in gold, it can maybe rally maybe $100, $150, $200 from here. Just get out. Don't be long. Now, once all the people will lose their jobs, once all the people right and left will be unemployed, who will fly in the airlines? Who will buy those expensive holiday packages? Who will buy those televisions? Who will buy those cars? Who will buy those real estate? No one, because no one will have the money. Now, if anyone is telling me that if people don't have money, there is no demand, so all the asset prices will fall down. If someone is saying me that's inflationary, either I'm stupid or they don't know what they are saying. And whatever I've said up until now, I've never not even touched base. I've not even touched the topic of deflation of the derivative collapse. The derivative market, which is in quadrillion of dollars, I've not even touched about the collapse that's about to come in the derivative market. You can watch one of my previous videos where I discuss about that. So I'm not even touching the derivative market thing here. In spite of that, it's clear that deflation is coming. So I will summarize. Gold can go to 1934 and test the previous highs. It can even go to 2000 or 2050 plus minus, somewhere near that. But within this year, gold's price will start to fall, and I predict gold price to be somewhere between $800 to $1,000 by 2022. It's definitely going to come. So the world will witness going forward a deflationary collapse, and the deflation will not go away quickly. It will not be a V-shaped recovery as President Trump is saying. It will be a prolonged deflation. It will be like an L shape, a crash, and then it will keep on continuing like that for a long period, maybe 3-4 years, and then there will be a mild or a moderate inflation, not hyperinflation. Even then, there will be no hyperinflation, just a mild or a moderate inflation. At that point of time, gold will be a hero. At that point of time, it's time to enter into gold for maybe 10-15 years. It will keep on giving you consistent returns year on year. But right now, it's not the time. Now, if you want me to talk in more detail about whether this coming deflationary collapse is a US phenomena or it will be a global phenomenon, because it's very important, because what I discussed here is about the US, about the dollars, what's going to happen in the US economy. Now, going forward, it will be a deflationary phenomenon all throughout, but other currencies of the world, especially the currencies of emerging markets, those will fall. Those will be decimated compared to the US dollar. So what will happen in those countries? Will it be this deflationary collapse? Will it be a global phenomena or a US based phenomena? So if you want to hear about that stuff in detail, I can make a separate video altogether, and you can let me know in the comment section if you want to listen to that or not. So that's all I had for today, friends. Please subscribe. I want the subscribers. I want to be visible on YouTube to spread this word. So please subscribe and share. I really, really appreciate it. So that's all I had for today. Thanks for listening. Take care of yourself and your family. And bye until next time.